stop. Do not skip this video. Because from this April, millions of UK drivers could be paying up to $790 more in car tax. And most people don't even know yet. What's worse, you could already be affected, even if you drive a normal family car, even if you bought your car years ago. And yes, even electric car owners are no longer safe. In the next few minutes, I'll show you exactly who gets hit, who escapes, and the one detail that could save you hundreds of pounds every year. Stay with me till the end, because missing this could cost you real money. If this video is helping you understand things clearly, this channel is made for people like you. No confusing language, no clickbait lies, just real updates that protect your money. I upload UK car tax changes, driving rules, pension updates, and cost of living news before most people even hear about them. So please, subscribe now, because the next update I upload could save you hundreds of pounds, and I don't want you to miss it. This channel isn't for everyone. It's for smart people who want to stay ahead. So if you're a car owner in the United Kingdom, you've probably heard some concerning news about car tax changes that are happening this April, and honestly, it's causing quite a bit of shock and worry among drivers across the country. The headline you're seeing everywhere talks about a massive £790 car tax shock and 13 new bans hitting UK drivers. And while that might sound absolutely terrifying at first glance, let me break down exactly what's happening in plain English so you can understand whether this affects you and how much you might actually need to pay. First things first, let's talk about what car tax actually is, because not everyone calls it the same thing. Some people call it road tax, others call it vehicle tax, but the official name is vehicle excise duty, which everyone just abbreviates to VED. It's basically a tax that the government charges you for using your vehicle on public roads in the United Kingdom. You have to pay this every single year if you want to legally drive your car on the road or even just park it on a public street. If you don't pay it, you can get fined, so it's not something you can ignore. Now here's where it gets a bit complicated, because the amount of car tax you pay depends on several different factors, and the government has changed the rules multiple times over the years, which means different cars are taxed in completely different ways depending on when they were first registered. Think of it like this. The government has created different sets of rules for different time periods, and your car falls into one of these categories based on when it was brand new and first put on the road. Let's start with the simplest group first. If your car was first registered before the 1st of March 2001, which means it's quite an old vehicle by now, your tax is based purely on how big the engine is. Cars with smaller engines pay less, cars with bigger engines pay more. It's that straightforward. The government measures engine size in something called cubic centimeters, or cc for short. If your engine is 1500 cc or less, you're paying £190 a year. If it's bigger than that, you're paying £315 annually. These rates have gone up slightly from what they were before, but if you're driving a car this old, the good news is that vehicles over 40 years old don't have to pay any road tax at all, though you still need to register that you're claiming the exemption. Now let's move to the next category, which affects quite a lot of people. If your car was registered between the 1st of March 2001 and the 31st of March 2017, your car falls into what's known as the emissions-based band system. This is where those 13 bands come in that you've been hearing about. The government created these bands based on how much carbon dioxide your car pumps out while it's driving. The idea was to encourage people to buy more environmentally friendly cars by making high-pollution vehicles more expensive to tax. These 13 bands are labeled from A all the way through to M, with A being the cleanest cars that produce the least pollution, and M being the dirtiest cars that produce the most. Until recently, if you had a car in band A that produced less than 100 grams of carbon dioxide per kilometer, you didn't have to pay anything at all. It was completely free. But from April 2025, even these super clean cars now have to pay £20 a year. It's not a huge amount, but it's no longer free. As you go up through the bands, the amount you pay increases quite dramatically. Band B cars that produce between 101 and 110 grams of CO2 per kilometer pay £35. Band C is £40. Band D is £65, and it keeps climbing like this all the way up. By the time you get to Band K, which includes cars producing between 226 and 255 grams of CO2 per kilometer, you're looking at 760 pounds a year. And if you've got a real gas guzzler in Band M that produces over 255 grams per kilometer, you're hitting that maximum amount of 790 pounds annually. This is where that shocking headline number comes from, but it's important to understand this only applies to the very worst polluting vehicles in this specific age category. For most people driving normal family cars from this era, you're probably somewhere in the middle bands paying anywhere from 150 to 300 pounds a year, which has gone up by about 10 to 30 pounds compared to what it was before. Not pleasant, certainly, but not 790 pounds either, unless you're driving something like a massive sports car or luxury SUV with a huge engine. Now here's where things get even more interesting, and this affects newer cars. If your car was registered on or after the 1st of April 2017, the government completely changed how car tax works. They realized that because cars were getting more and more efficient and producing less CO2, lots of people weren't paying much tax at all, and the government was losing revenue. So they created a new system that's actually quite different. For these newer cars, you pay one amount in the very first year based on emissions, which is called the first-year rate or sometimes the showroom tax, because it's usually included in the price when you buy a brand new car from a dealer. Then, from the second year onwards, almost everyone pays the same flat standard rate regardless of what kind of car you have. As of April 2025, this standard rate is 195 pounds per year for pretty much everyone, whether you drive a tiny little city car or a massive Range Rover. It used to be 190 pounds, so it's gone up by 5 pounds. But here's the really important bit that's changed, and it's causing a lot of discussion. Until now, electric cars and very low-emission cars like plug-in hybrids were exempt from paying any road tax at all. 0 pounds. Nothing. This was the government's way of encouraging people to buy electric vehicles. Well, that's completely changed as of April 2025. Electric cars now have to pay road tax just like everyone else. If you buy a brand new electric car that gets registered after April 1st, 2025, you'll pay 10 pounds for the first year, then 195 pounds every year after that. If your electric car was registered between April 2017 and March 2025, you now have to start paying that 195-pound standard rate too. And if you've got an older electric car registered before 2017, you're paying 20 pounds a year. So the free ride for electric vehicle owners is officially over. What about those first-year rates I mentioned for new cars? Well, this is where some of the really dramatic increases have happened. The government basically doubled the first-year tax for almost every single emissions band. If you're buying a brand new car that produces between 76 grams of CO2 per kilometer and above, you're paying twice what you would have paid if you'd bought the exact same car last year. For example, if you're buying a car that produces between 121 and 130 grams per kilometer, the first-year rate has jumped from 165 pounds to 170 pounds. If you go higher up the scale to cars producing between 226 and 255 grams, the first-year tax has leapt from 735 pounds to 760 pounds. And for the absolute worst polluters producing over 255 grams, you're now paying 790 pounds in that first year instead of 750 pounds. But wait, it gets even more expensive if you're buying an expensive car. The government has this additional charge called the expensive car supplement, though some people call it the luxury car tax. If your car cost more than 40,000 pounds when it was brand new, including all the options and extras, you have to pay an extra 425 pounds on top of your normal road tax every single year from the second year through to the sixth year. That means over those 5 years, you're paying an additional 2,125 pounds in total just because your car was expensive when new. Here's something really important to understand about this expensive car supplement. It doesn't matter if you bought the car secondhand for less than 40,000 pounds. What matters is what the original list price was when the car was first sold as brand new. So if you buy a 3-year-old car for £35,000, but when it was first sold it had a list price of £45,000, you still have to pay that supplement for the remaining years until it turns 6 years old. There's no way to avoid it by negotiating a lower price because it's based on the manufacturer's recommended retail price. And here's a big change that's really upset electric car buyers. Until now, electric cars were exempt from this expensive car supplement even if they cost more than £40,000. But from April 2025, if you buy a new electric car costing over £40,000, or actually over £50,000 for electric cars specifically, you now have to pay that £425 annual supplement for 5 years, just like everyone else. So if you're buying a fancy electric car like a Tesla Model S, or an Audi e-tron, or a Mercedes EQS, you're now looking at a total annual tax bill of £620, which is the £195 standard rate plus the £425 expensive car supplement. Now you might be wondering why the government is doing all of this. Well, there are a few reasons they've given. First, they say it's about fairness. They argue that as more and more people switch to electric cars, those drivers aren't paying anything toward maintaining the roads they use, while everyone else is still paying. The government says all road users should contribute something toward road maintenance. Second, there's the simple fact that the government needs money. With so many low-emission cars on the road paying little or nothing in tax, the government was losing revenue that they used to get from car tax. These changes are expected to bring in hundreds of millions of pounds in additional revenue every year. And third, they've adjusted rates in line with inflation using something called the Retail Price Index, which is why most rates have gone up by small amounts even if the structure hasn't changed. For hybrid cars, there's been a specific change too. There used to be a £10 discount for alternative fuel vehicles, including hybrids, which meant they paid slightly less than pure petrol or diesel cars. That discount has now been scrapped entirely. Hybrid drivers now pay the full £195 standard rate, just like everyone else. And for first-year rates on new hybrids, if your plug-in hybrid produces between 1 and 50 grams of CO2 per kilometer, you're now paying £110 for the first year instead of getting it free or paying just £10 like before. That's a massive jump. There's also something worth mentioning about diesel cars specifically. If you're buying a new diesel car and it doesn't meet what's called the Real Driving Emissions Step 2 standard, which is a technical measurement of nitrogen oxide emissions, your first-year tax gets bumped up by 1 band. So you'd pay the rate for the next band up, which means even more money. Most modern diesels do meet this standard, but it's worth checking with the manufacturer before you buy. So what does all this actually mean for the average person? Well, if you already own a car that's a few years old and you're not planning to buy a new one, the changes are actually quite modest for most people. Your annual tax might have gone up by somewhere between £5 and £30, depending on which category your car falls into. It's annoying, but it's not going to break the bank for most households. The standard rate went up by just £5 from £190 to £195, and the expensive car supplement went up by £15 from £410 to £425. The people really feeling the pinch are those buying brand new cars, especially if they're buying high-emission vehicles or expensive vehicles. If you're in the market for a new car, and it's a big SUV or a performance car with a large engine, your first-year tax bill could be double what it would have been last year. And if that car costs over £40,000, you're committing to 5 years of paying that expensive car supplement on top of everything else. Over the lifetime of owning the car, these costs really add up. Electric car buyers are in a strange position too. On one hand, electric cars are still the cheapest to tax overall, paying just £10 in the first year and £195 thereafter, which is still less than most petrol and diesel cars when you factor in the first-year rates. But for people who were planning to buy an electric car specifically because they wouldn't have to pay any road tax, this is a disappointment. The financial incentive to go electric has been reduced, although electric cars still save you money on fuel costs, which often more than makes up for the new tax. One thing that hasn't changed is how you actually pay your car tax. You can still do it online through the government website, which is the easiest way, or you can go to your local post office if you prefer to do it in person. You can choose to pay for either 6 months or 12 months at a time, and you can spread the cost with monthly payments through direct debit. Though there's a 5% surcharge if you choose monthly payments rather than paying in a lump sum. The first-year tax on a brand new car is usually paid by the dealer when they register the vehicle, so it's often included in the purchase price you negotiate. If you're not sure how much your specific car costs to tax, the government has an online tool where you can enter your vehicle registration number and it will tell you exactly what you need to pay. This is really useful because with all these different rules for different year groups and emission bands, it can get very confusing trying to figure out which category you fall into. Looking ahead, the government has already announced that even more changes are coming. From April 2028, they're planning to introduce a pay-per-mile system for electric and plug-in hybrid cars. Electric car drivers would pay 3 pence per mile they drive, while plug-in hybrid drivers would pay 1.5 pence per mile. This would be on top of the annual VED rate. If you drive the average of 8,000 miles per year in an electric car, that would mean an extra 240 pounds per year, taking your total annual car tax bill to over 400 pounds. But that's still a couple of years away and could change before it's actually implemented. The bottom line is this: yes, car tax is going up for pretty much everyone, and yes, that 790-pound figure in the headline is real, but it only applies to a relatively small number of people driving the absolute worst polluting vehicles registered between 2001 and 2017, or buying brand new cars with massive engines. For the average driver with a normal family car, you're probably looking at an increase of somewhere between 5 and 30 pounds per year, which works out to less than 3 pounds per month. Still not great, especially when everything else is going up in price too, but it's not quite the apocalyptic scenario that some of the headlines might make you think it is. The key is understanding which category your car falls into and planning accordingly, especially if you're thinking about buying a new vehicle in the near future.